Hello traders, welcome back to the channel. Today's video I'm going to talk about how to grow a small Forex account. Let's say you're starting with £10, £50, £100, £500 or even up to £1,000 to £5,000. These are considered small Forex accounts. They're not really accounts you can make a living from. You can't suddenly quit your job with a £500 account. But today I'm going to give you some tips on how I used to, back in the day, a couple years ago. I only had this sort of account size. Pretty much tell you the tips I used to use, the practices I used to do to actually grow these accounts, how I used to trade them slightly differently to my main accounts, how I trade now, and how you guys can actually start to grow this account, maybe into an account you can live off. That is obviously always the ultimate goal. But yeah, let's get into the video. Before we actually get into the main points, I just want to say first, you've got to be realistic with what you want from this account. If your account is only £500, £100, don't expect to make a living, or don't expect to make the same results as someone with a larger Forex account. This is just unrealistic, and when you don't get those results, you'll be disheartened. Then you might just want to stop trading, and you don't get the same results as someone that's been doing it, let's say 5 years, 10 years in the markets, or someone that just has a larger Forex account. So, and a lot of people actually, post on YouTube, post these videos. If you watch this video, if you buy my course, if you buy my signals, you can turn £10 into £10,000. You can turn £100 into £10,000, within a matter of weeks or months. And this is just complete and utter rubbish. It's not well, it is possible, but you're not going to be able to do it consistently enough to actually make a career off it or have it as your full-time job. If you look at the stats and you put it into like a compound interest calculator, if you have a £500 account, which obviously isn't considered a large account, if you make around 25% per month, at the end of the year it's gonna be like over £7,000. People have unrealistic expectations. They think they're gonna make 25, 30, 40, 50% a month because of what they see on Instagram, what they see on YouTube, and all these different ads and stuff. Now you've got to be realistic with your goals, and if you have an account of that sort of size, you're not really gonna have the skill set to make, let's say, 25% a month, 20% a month consistently. Otherwise you would have a bigger account. It's as simple as that. And let's say your account is only 500. Any money you make outside of trading, this is only if you're profitable. You shouldn't be depositing more money into your account if you're not profitable. Let's say you're a losing trader, you're not making any more profit, don't deposit more money. Only start adding money when you become profitable. Otherwise your loss is just going to get bigger and bigger and bigger. Instead of losing £5 per trade, you might be losing £50 per trade because you keep depositing. Account gets bigger, the losses get bigger, and of course the wins get bigger, but you're not winning. You're a losing trader. My best advice for a small account is to compound if you're profitable. So let's say from your job you earn, just as an example, £5,000 a month, and after that you have 500 spare. After all your expenses, all your other investments and anything you want to buy, you have £500 spare. Add that to your trading account if you're profitable, because within a year, 12 months of £500 deposits, that's £6,000 a year you're depositing into your account. Within a matter of years, and obviously as a result of the compound effect, you can have a very, very large account within, let's say, 5 years, and then you could potentially make it your main full-time income. What I actually see a lot of traders do, I run a mentorship group, and I see a lot of people DM me on Instagram. They try and trade it differently because the account is smaller. So let's say their account is £1,000 instead of 100,000. They think, okay, to make a decent amount of money, I have to make 10%, 20% per trade. Whereas if they were trading the same strategy on a £100,000 account, they wouldn't try and make 10 grand, 20 grand, 30 grand per trade. They'd be happy with a nice 1 to 3, a 1 to 4, a 1 to 5, 4 grand, 5 grand per trade. It's very, very good going. But because on their £1,000 account it's only £30, £40, they don't see it as good profit. Whereas if you're thinking in terms of percentage, that is very, very good going. And if you're making like 4 or 5% per trade with a decent win rate, you're sorted, you're set up for life with this sort of skill set in your trading. So you think if you can make 4%, 5% per month consistently, you can go to an investor, let's say, you can go onto prop firms, and you can easily make a lot of money from this sort of trading. Myself personally, I was in that same sort of position when I had these smaller accounts. I was trying to just flip it in every single trade, make 50%, 100% within a week, and it's just not sustainable at all. You can do it once or twice. Everyone can flip an account, they can get a bit lucky once, but it's obviously not going to happen a lot. But you see on my account, I'll show you guys here, all the wins are like 2 to 3%, but it all adds up. So you see, this is my funded account, $250,000 account, right? 2% wins, 3% wins, and it all adds up. Whereas if you're on a smaller account, 2 to 3% is only £20, £30, or it could even be £5 to £10 per trade. But if you trade it like it's a larger account, focus on percentage, focus on minimizing your drawdown, sticking to your plan. Then once you actually have the capital, or let's say you go for a prop firm, that's when you can then have the knowledge, and it's kind of like automatic that, okay, 1 to 3, 1 to 4 every single time. Absolutely perfect. Whereas if you're used to trading a 1 to 10, 1 to 20 on a smaller account, you're still going to be able to hold to your full target on a larger account. And let's say your win rate's low, and on a smaller account you're holding to a 1 to 10 because the profit is low. Will you still be able to do this when the profit is 25, 30 grand out of 1 to 10? That's what you got to think. Whereas if you're consistently doing the exact same every single week, every single month, just kind of like copy and pasting the setup. If I see this, I enter. If I don't see this, I don't enter. Set risk to reward, absolutely perfect. But if you trade it differently, that's when a lot of people go from a small account to a prop firm. They're used to trading a £1,000 account. They're doing very, very well. Not saying they could do badly on this account. They might be making a lot of profit trading these 1 to 10s, 1 to 20s. They're then going onto a larger account. They've never seen that sort of profit before. And if you're going from a £1,000 account to a £400,000 account, it's definitely going to affect you. It's going to affect your trading, especially the big numbers you're seeing. The drawdown, the profit. Let's say price drops 10 pips, you could lose 10, 20 grand of your profit. Will you be able to deal with that? That's what you got to think about. Next point is to actually use an amount you can actually practice proper risk management with. I see a lot of people trying to deposit £10, £20. You can't practice risk management or get used to your risk management with this sort of account size. It's just not possible. I'd say £250 to £500 is sort of the best amount to start with. With 500 you can risk £5 per trade, which is obviously 1% risk. 250 you can risk £2.50, which is also 1% per risk, 1% risk per trade. But obviously with 250 it's hard, because even with like 0.01, that's 25 pips, and you're over your 1% risk. So you kind of, I'd say 500 to 1,000 is probably the best area to start with. On your first account, let's say you've been trading demo before that, then you go in 500 to 1,000. That's a good sort of amount to start with. You're obviously not going to be able to make serious money from that, and I'm not saying that. I'd say to make serious money enough to sort of live off, I'd say 25 to 50,000 pounds in an account, a personal account, or 100,000 prop firm. But obviously it's not your money. You can't just withdraw it whenever you want. Let's say you have 50,000 of your own money. Let's say you need to pay for something. You can kind of just withdraw that money. You get it the next day in your bank. Boom, it's yours. Prop firm, you have to wait 30 days. That's if you make profit, and you don't actually have access to that original 100,000 anyway. So it's not actually your money. That's where you got to be careful. I see people saying they're $100,000 funded and they trade a $100,000 account. Technically, because of the drawdown rules, you're only trading technically a £10,000 account. So you can only lose £10,000, then the account's blown. So you're technically only trading a £10,000 account, and also you don't have access to that money. Whereas if you've got your own £100,000 account, it's all yours. You can have access to all of that money. You can choose the rules, everything. But obviously prop firms are the best way to grow, your net worth, your overall capital in your personal account as well. So if you do get to a point where you have a £1,000 account, £500 account, and you're making 10%, 5 to 10% per month, use that money to then buy a prop firm. £500 can buy you a $100,000 challenge with a lot of the prop firms. Some are even cheaper than that now, which is very, very nice. And then you make 0.5% and you've made your 500 back anyway, and you get the refund. It's kind of a win-win in that sort of scenario. The last point is, if you are at the stage in your journey where you only have access to a small account, don't even think about the profits. If it's not enough in your account to actually make a living from, just forget about the profits. Just focus on percentage and mastering the skill set. Mastering, building up the data for your strategy, when it works, when it doesn't work, what happens at this time of year, and all that sort of stuff. You can build up this nice database of your strategy, so you understand every single bit about it. So then once you actually get access to large amounts of money, or you've eventually compounded your account, you know that it works absolutely perfectly. You know when it works, how it works, everything about your strategy. Your biggest losing streak, your potential biggest winning streak, and then you get no surprises when you're actually on that larger account. So if you guys did enjoy this video, hopefully people that are watching with the small accounts do actually go ahead and take some of the advice shared in this video. Stop focusing on the money. Trade it like you would trade a larger account. Focus on percentage, not profits, and just take it slowly and focus on the skill set. Skill set is the most important thing. If you can trade a £500 account, you can trade a 500 grand account if you're trading it properly. Whereas if you can't trade a £500 account properly, you'll never be able to trade a £500,000 account properly. Just remember that. So I'll catch you guys in the next video.